It appears that we're having some difficulty with the audio, and what I would suggest is for you to go to the Sprott Asset Management website, which is basically in our website. We have the link here. Just click on Sprott Asset Management. That will take you to their website, and if you click on Market Insights, click on Rick Rule, and you can click on the interview that was done for October the 3rd. And maybe you can take a look at it on your own, since we're having a little bit of audio problems here. But what I wanted to share with you is the fact that I do share the same, you might say, elements that Rick has commented several times on many interviews that we have done with him. And I believe that once again, as they have pointed out, and I believe in my own conviction, that what has happened here is basically an unusual situation that may be telling us a much greater a sign, a much bigger sign in terms of what really might be happening to this metal here over the near future. I think the opportunity is truly a historic one, and like Rick says, that we're going to be looking at this as the good old days in a very short amount of time. One of the things I want to do right away is basically get into the report that we just published, which is the weekly gold and silver futures indicator that we write every week, and we basically use the algorithms to be able to identify the ideal levels in terms of trading on a weekly basis. And if we can just take a look at the report that was just published a little while ago, in terms of the gold, the December gold futures contract, the paper market contract, closed at 1191, and with the market closing below the 50-day moving average of 1266 is confirmation that the weekly trend is bearish still. A close above 1266, we are looking basically for a confirmation that the downtrend has turned to neutral. With the market closing below the price momentum indicator of 1199, it basically confirms that the price momentum is bearish, but a close above the VC weekly of 1199 would negate the bearish signal to neutral. This is basically the algorithm that we use, that in identifying the highest probability levels of support and resistance, that if we come in next week and the market comes down or you're short, to cover your short positions and corrections at 1182 to 1173. The market could come down, according to this algorithms here, into the 1182 to 1173 levels, and is recommending to reverse and go long basically at these levels. When the price comes down to these algorithms that we're using, these blue lines, they are the highest probability signals in order to initiate a swing trade, or to be able to identify the levels of support that seem to be of high probability. And as long as these levels are not broken, they offer the highest entry point in terms of probability for anybody that is looking to trade on the long side. The VC price momentum indicator, which is the green line here of 11.99, is the pivot point of the weekly metrics that will identify for us if the downtrend has been negated. And so if the market does turn around either at the buy 1 level or the B2 level, and it reverses to a long position and it triggers a long position, and it's recommending obviously that the position will be reinforced by a close above 11.99, which is the pivot point, and then it recommends to take some profits around 12.08 to 12.25. Now, these are swing trades for next week, and we have been able to identify where the resistance is and where the support is as the market basically closed very, very, very near the VC code or the weekly pivot point that will identify for us the trend of the market. Now, what I want to do here, since we've identified the algorithms in terms of the levels of support that we might be dealing with in the very near future, what I have done basically is I have expanded the analysis to the weekly charts that we're looking at when we made the high of about 1804 in November 7th of 2011, and taken the analysis from the high that was made of 1804, we seem to be in a major area of support. The first bottom was made back in June 24 of 2013. Second bottom was made on December 16th of 2013, and we are in the process of making the third bottom as of Friday at the low of 1190.30. And so the reality obviously is that it seems that this market is building some kind of a channel or a pattern going back to August 26th, the high of August 26th, connecting to the high that we made on March 17. It gives us the resistance level that we could experience using these two highs as the resistance point. And that puts us into that 1337 area. You might say that is pretty much very close to the 23.6% Fibonacci retracement that we're looking at from the lows here that we made recently as of last week, or these lows that seem to go back basically to June of 2013. The market did break, obviously, the support here of about 1281, and we have seen a washout pretty much all the way down to where we are at 1191, which was a possibility if we broke this level of support. And what I'm looking here is to see a confirmation of this correction, and we've been tested, so to speak, in identifying the bottom here, as actually the market has confirmed that for the past, for the past 12 months or so. And given the confirmation, basically, that we're looking at, the price we expect should hold from here. We are basically at a major level of what seems to be a major long-term resistance. And the prices fluctuating below 1200, 1190 obviously is below the cost of production, and what really is providing is the opportunity that if in fact we are at the lows or near the lows or making the lows, that this would be a great opportunity to buy long term in order to basically put on a position that I believe could build wealth over the long term. Not just a trade, but that it could build wealth substantially. And when you're talking about, how long would it take, or what is it going to take for this market to come back up, into the upper end of the range, let's say here that we're looking at, into that 1800, we obviously have to do some work, and we have identified here some long-term fan line resistance levels that we have. Let me say to you that it is my conviction, based on the long-term work that we have, that even though the market has come down to this significant lows that we have made, under $1,200 for gold, that it is confirmation that the market might be in the process of not only fulfilling the downside objectives from a technical point of view, but that it might be fulfilling some long-term expectations of a major bottom in the making. So let's take a look at, in fact, if we use the Fibonacci retracement from the high that we made in 2011 to the recent lows here, where we could see a corrective pattern. We're looking at a 23.6% retracement, which is 1320. Major resistance is at 1370, and once breaking above that resistance, then we're looking at a 38.2% retracement of about 1413. 1489 is 50% retracement. Before we can see how much higher we're going to go, I think the major resistance that we're going to find is at around 1564, which is equivalent to the golden ratio of 61.8% Fibonacci retracement. And we could get as high as 1671, which is a 78.6% retracement. And in looking at the daily chart, we can see clearly more where the market levels of support might be developing. And here we see basically a closer picture of what I just mentioned in terms of the pivot levels that I'm looking for next week. We're looking to add to our long position between 1182 and 1173 if the opportunity presents itself. This trend line that we have here indicates that the buy one level of 1182 should offer tremendous support. The probabilities that the market will turn from this codes is very high as the market comes down to test these levels here if they do test it next week. And so we continue to feel that this market is offering a major opportunity to add to the position long term. Do not margin your position, do not finance your position, but use this price to dollar average if you've experienced, like I have, a correction obviously from the high that we made back in March. The market is trading in these ranges between 1187 to 1392 to 1400, as we saw here from December to March. And that was a pretty significant move in a short period of time before the market reversed to the downside and has come down once again to test these lower levels of long-term support where we're in right now. So I feel very strongly, once again, given the current analysis and given the current development, that the fact that this price has come down to these levels validates the longer term analysis that we're putting in some kind of a major long-term bottom in the market. Not an intermediate bottom, but a major long-term bottom in the market. And what I would like to see is the market testing. If it's going to test, it should be in the next week or so. There's levels of support. I am not convinced that at this juncture the market will break below the 1182. And if we get a close above the 1199 come next week, then I'm going to be looking for prices to trade above 1225 and eventually about 1240, which will break the downtrend and put into perspective basically the highs of about 1347. So I continue to say that at this point, if you've held your position, I know that it has been a difficult time, very painful. I can appreciate that, but again, the opportunity presenting itself is one that I think you will appreciate that in the next couple of years, if not sooner, that these levels are truly a gift, a historic time to build a position long term. Not to mention the fundamentals that are in place that we can discuss, or you can read about it basically in the media regarding the debt, the economics, and everything else that's going on, which I can't seem to make any sense of the fundamentals at this point in time. Because if you were to take into account these fundamentals, the price of gold and silver should be a lot higher than where it is right now. And so we are looking for the paper market technical analysis to confirm for us when this turn could be expected. So for gold, next week, look for a potential test of 1182, where it's recommended to add and to buy into this correction with confirmation on a close above 1200. A close above 1200 would confirm the targets up to about 1225. A close above 1225 would negate this bear trend that we're in, and would basically activate the intermediate to longer term uptrend above 1250. Let's take a look at silver here and see what it's telling us if we use the indicators for next week. The December silver futures contract closed at 1684. The market closing below the 50-day moving average of 2012 is confirmation that the weekly trend momentum is bearish. A close above the 50-day or 2012 would negate the weekly bearish short-term trend to neutral. With the market closing below the weekly indicator of 1704, it confirms that the price momentum is bearish. If it closes above 1704, it would negate the downtrend or the bearish signal to neutral. The algorithm is recommending to, if you're short, to cover your short on corrections at the 1644 to 1604 levels for next week. And reverse to go long at this point with a 1604 stop on a weekly basis. If you reverse and you go long, then look to take some profits at about 1744 to 1804 on a swing trade during next week. Now, let's take a look at the December future silver chart and see that the code, the buy one or buy two levels are pretty specific in terms of where to buy, 1644, 1604. If the market comes down to these levels, it would be a very high probability and an extremely oversold level that you would be able to add on to your long-term position or basically put on a swing trade position. The price pivot point direction for next week is a close above 1704 with targets of 1744 to 1804 if the market does come down to these levels. We're looking at resistance in the $18 level, 1840, 1889, and 1939. With a close above 1939, it would be basically a breakout point and a resumption of the uptrend. The market has come down to extreme levels of support once again that I believe are putting in a major long-term bottom in the market. Let's take a look at the weekly chart here. In using the highs that we saw back in February 27 of 2012 of 37.58, it appears that we have come down lower than the level in June of 2013, December 2013, June, and we have broken this level of support and obviously come down to the lower end of the band where we are right now in the 1680 vicinity to 1650. The algorithms are indicating that once again these levels should hold, and that these levels are major levels that are indicating the market is extremely oversold. Based on our indicators here that we use, it is our conviction that we should see some kind of reaction to the upside as we come into next week. I think this correction here that we saw on Friday was that it took the market all the way down here to a low of 1664 was the low, obviously, that we haven't seen in a number of years. And what we're looking for is for the market to reject these lows from here, to come back and close above 1704. Closing above 1704 is going to ignite the swing pattern with a target above 18, and obviously closing above 18, it would indicate for us that we are completing this bottom here and give us more reason and more confidence basically to take a look at the possibility that we could be moving up to that 24 level in terms of the longer term. The first level of resistance of the Fend line comes in at about 24.25. Second resistance level comes in at about 26.52, and the upper end of the resistance is at about 29 or 30, which I believe we will see that over the next few months. I think this correction here is prepping the market, to basically develop this kind of a pattern here. So we continue to hold. We haven't liquidated our position. We're looking to average what we have, and given the confirmation of the market next week, that we will be able to add more positions if the market does cooperate. But we want to see a little more confirmation come in here, and we look forward to next week. As I said, we are expecting that we should have an up week come next week. I hope that this has been able to give you an idea of what we're doing here, and in terms of using these codes, and hopefully be able to identify for you some high probability swing trades for next week. I will make this available for those that are interested in getting this information on the website come next week. In the meantime, this is Patrick MontesDeOca with the Equity Management Academy. Until next time, take care and be well.